Good evening and welcome to tonight's public webinar where we look at ASX investment opportunities in review for the 18th of December. The information covered this evening is general advice only. I'll be breaking the presentation up into two components. We'll look at portfolio investing and then we'll conclude with a review of our ASX 200 trade table. I'll start this evening with analysis of the S&P 500 and XJO as a backdrop for how we see markets trending. If you'd like to know more about the products that we offer, please visit our website and have a look at the research subscription service, either individual broking accounts or our managed funds. If you have any questions, please give me a call on 1300 614 002. Up on screen is the graph of the Nasdaq. For the moment, the momentum remains strong. We've had this consolidation in the index a few weeks ago, and then towards the middle to back end of last week, we had the strong rally in the index again. So we have the red arrow, which is kind of we view that as our first warning sign, but it's not until the momentum really rolled over and traded below that average that we would start to take a slightly more cautious look at the market. But for the moment, the technology sector certainly still remains a bright spot. The S&P 500, similar type pattern there. We're mindful that we've got the red arrow there, but the price action's still quite a bit above the moving average, and it's not until we get that close below that we would even start thinking about any positioning around the short side of the index or in inverse ETFs. Domestically, our target was 7,200 on the XJO. We're now pushing a couple of hundred points above that. We're getting into sort of levels which are at the top end of that consolidation band that we've been in for the last 2 years. You could even sort of really go back to 21, middle of 2021 there. That would put us at about 7,600, so we're just below that, but we're certainly getting into the top end of this consolidation range. We're pretty comfortable that earnings actually justify valuation, so there's no concern around markets trading at stretched multiples simply because the earnings are actually supporting the current PE ratio. So for the moment, still a buyer of equities. Just become a little bit cautious in the weeks ahead if we see these markets roll over below the moving average. But it's more of a view that we move into a temporary consolidation rather than any sort of meaningful sell-off in the market. Just moving through a couple of the other macro backdrop ideas just to share with you, and I'll just skip through a couple of these charts as we get into the key ones. So the Dow Jones in the US has obviously been strong, pushing up and making fresh highs. On the opposite side, so the Asian exposure in the Hang Seng and Chinese markets are still at multi-year lows. So there's an example there, the Shanghai Composite near its lows. This is the one I wanted to get to, which is the US 10-year bond rate. So we had interest rates sitting up at 5%. We've now pulled, this is on the 10-year Treasury, so we've now pulled back really a full percentage point, which means that the market's pricing in this potential idea that the US has 3 quarter-point rate cuts next year. So the market's already priced that in. That explains in part the rally that we've had in equities. So again, I think you can sort of get to a scenario where you go, okay, well, unless we get a re-acceleration in earnings, and we know from prior week webinars, our focus there is tracking the average earnings for all S&P 500 companies. And based on that current earnings rate, it supports the index in the US being at around 4,500 points, and we're just a little bit above that. Domestically, the Australian dollar, so as the US dollar's pulled back on those lower rates, the Aussie dollar's rallied. The Aussie probably should sit somewhere between sort of where we're, 65 to 70 cents, I think is the range, and probably pushing a little more on the up through the resistance levels of that range. So I think gradually the Aussie dollar does a little bit better over time. And the euro also. So there we are, back to the Nasdaq. All right, so starting this evening, let's go into what's gone on the advisory blog here. I'll comment on these, and then we'll come back and circle through the ASX opportunities that we're focusing on in the market at present. So Iluka Resources, just highlighting to you today that at around this $6.50, it might be one that you want to put on your watch list. The volume started to build in the last few days. What we're looking for is a bit more evidence of an inflection point, and the buyers starting to drive this up. Probably a break above $7, and you want to have a look at jumping on board that. Liontown Resources, just highlighting to you in the lithium area of the market, we're starting to see some decent momentum off this $1.25 level. So again, if you want to have a think about that as an opportunity with a stop loss below the pivot low. Paladin in the uranium area. This is kind of a favourite. This is the stock, I guess, that most people would think about when thinking about going to uranium play. I'm a bit more cautious on this. If we saw it pull back to maybe below 90 cents, I'd expect that to shift back to algorithm buy signals, and we might take a closer look at it. The one in the uranium space that you may like to consider would be this one, deep yellow. So it's under algorithm buy signal, support there at around 90 cents. You can see the algorithm buy signal. So again, just watch for that momentum starting to build, and you would run your stop loss below that pivot low. Another uranium which is producing, which is Boss Energy. So BOE is the code. Support there at around that $4 mark. Under algorithm buy signal, originally back at $3 and now a subsequent signal here at about $3.80, and we can see strong close there today. So a couple of ideas in the uranium space there, and the lithium ideas there for you to have a look at and add to your watch list. Domain, DHG is the code here, just drawing your attention to this one, the correction from 425 down to 330. This now is on my radar, and I'll continue to monitor that and update you via the blog. Tabcorp, last week I posted this at near the low of the sell-off, and started to forecast that we were getting close to a bit of a short covering rally happening in this one. The fundamentals of the business just were not bad enough to see this sell-off just continue to extend at the rate that it was. What I didn't see happening, though, was the outcome around the Victorian licence. Obviously far better than the market had expected. So it helps Tabcorp keep that exclusive licence for retail wagering and betting in the pubs and clubs in Victoria. Essentially kind of a long-term arrangement there that secures their competitive advantage, I guess you would say. So we saw the stock rally almost 30%. We've closed out this position. We've just simply taken profit on it today. I don't think it's a matter of having to, but fair value for it's probably not much more than $1, given that the earnings have been declining over the last 6 months or so, 6 to 12 months. So we've just simply taken the profit on that one and moved on. But hopefully, as members, some of you or most of you have participated in Tabcorp. It was really sort of quite timely there, the reminder about having a look at that one. On the US earnings side this week, what I'm focusing on is tomorrow night having a closer look at FedEx and Accenture's results. Also Micron Technology on Wednesday night, and then on Thursday night wanting to come back and have a closer look at Paychex, Carnival and Nike. In particular Nike, I'll be interested in Micron in particular and Accenture. They're businesses that provide an important sort of benchmark as to how we view in particular technology and business spending in that technology consulting space, which is a key component of our technology disruptor type portfolio that we run. Alright, so moving back through the articles a little bit further, Capricorn Metals, just again drawing your attention to this. This is a new holding in the ASX 200 trade table. We'll take a closer look at that at the under the trading section of tonight's webinar, where we dig into sort of the current holdings in the trade table. Woodside Petroleum, I think this really fits both for investors or traders. The trade setup, you can see there, looking at it under a bit closer sort of microscope there. We have the higher high often referred to as the first test, first fail, where the market's rallied, created that support. So a trader could buy in on this momentum reversal, put the stop loss below there, and investor may just be sort of more comfortable with accumulating the stock on a valuation basis. But either way, Woodside is one that we would suggest that you add to your portfolios. The China New Economy ETF, obviously this carries a bit more risk here, but it's been difficult to try to find an inflection point in these Chinese companies, whether it be probably the exceptions being Pinduoduo, but Alibaba, JD.com, most China ETFs, they've continued to struggle. But our view would be that in 2024, you probably just see better performance all round out of these China-facing companies. Beach Energy, this is a recent addition to the trade table. We'll again have a look at that later. It's been closed out under the shorter term momentum rules, which we'll have a look at when I bring the chart up. But the setup here was really off the algorithm buy signal and around that $1.45 thereabouts, and it's still sitting okay. Now we're getting back a bit further in time through to December the 13th, so this was the original setup there on Tabcorp that I highlighted, and then obviously that's up at 90 cents today, and then there we are back to last week's webinar. So let's jump into those stocks and have a closer look at them from a chart standpoint. So I'm going to this list here, the recent blog post. This captures the last 30 days, and we'll mainly focus on the ones that are under buy conditions that have obviously been the focus of the advice that I've provided through that blog. So Tabcorp Holdings, really strong rally here today off the back of that Victorian gaming licence deal. So we've had the rally there, as I said, about 30% from the lows. We've closed out the trades on our account and client accounts today. Maybe there's some upside there to 95 $1. Longer term, we don't mind it, so it just depends whether you're viewing it from a investor portfolio holding or a trading holding. For us, it was predominantly just a trading position, so we've taken profit on that one today. Origin Energy, don't mind this. The correction here from 925 back down to 775. I would suggest that you run a stop loss below that pivot low there at 775, and there's enough momentum there, and obviously just flagging that there, that around that 775 support level, so we don't mind Origin. A2 Milk, now let's just have a look at this. Since the beginning of the year, it's been in a strong downtrend, and we just need to reference sort of that moving average as a reference to that. But we're starting to see something possibly a little bit different emerge here. Not only have we seen this upgraded by some of the investment banks to a buy, we're starting to see a slight easing in some of these trade restrictions with China, and A2 Milk looks to be forming a base, and we're starting to see a little bit of positive momentum there. Now, this certainly doesn't sit as an overweight position in our portfolio. It's almost a bit more at the speculative end, but it does seem like the tide's turned a little bit there, and it could be one for you to have a think about. Capricorn Metals, this is from the trade table, so the fact that it's under algorithm buy signal, the green arrow, so you can see the setup there. Gold Road Resources, that's been one of our preferred gold exposures. So this one here, Domain Holdings, so switch from sell conditions there into algorithm buy. So what you want to be looking at here is watching this for a cross back above that moving average. So we think that sort of around this 320 level should be a support, and we should start to see an increase in buying interest in this momentum. So I'll certainly be updating you on the blog tomorrow and later in the week as we monitor our entry position into Domain. Oil, so we've been adding exposure in this area, both through through commodity futures and individual stocks. So this is one way of getting exposure to the oil trade, which is the O Beta Shares Crude Oil Index ETF. So it's corrected there from $6.75 down to $5. Again, I would suggest that you run a stop loss off that pivot low there, so your stop's going to be just above $5. If you're not wanting to look at it from an oil index level. The other alternative would obviously go to Woodside or Santos, which we'll have a look at those in a moment. Computer share, not doing anything there at the moment. GDX, so still GDX and Gold Roads are our preferred gold exposure. Brambles, the correction from 15 down to 13. Brambles comes onto the list. Woodside Petroleum, the correction from 40 down to 30, puts Woodside on the list. So this is the pattern that we're looking at here. If it breaks below 29.74, that would be, looking at this from a trader's perspective, that would be your first warning that you would want to possibly have a stop loss up as high as that. Or if you wanted to give it a little more room, your stop loss would be at 28.76 there. So what we're looking to have happen here is for this momentum to continue, this higher level of value here at around that 29.70 to hold, and we're looking for further upside as oil prices trade a little bit higher than where they're consolidating at the moment. Beach Energy, so this is the one that was originally picked up from the trade table, but under algorithm buy signal, under green arrow. Again, your stop loss would be back below this low, but Beach Energy is one that sits in that basket there for you to have a think about. Zero, a little more cautious here on this one. I'm mindful that obviously it's gone from sell conditions into algorithm buy, and it sits in the ASX 100 model portfolio because of that. But just from a valuation standpoint, it does trade on a very high PE, maybe hopeful. But the valuation that I had was trying to sort of pick this up closer down to $90. So we really just we'll come back and revisit that one in the new year. Wesfarmers continues to perform very well, so we stick with that, and that sits at about the top sort of 4 or 5 weighted stocks in our portfolio. AZJ under buy conditions, so the switch there from sell in algorithm buy, we quite like that. Altium, under algorithm buy signal, so it originally switched from sell there into buy. So we've been fairly bullish on this as one of the preferred tech plays in Australia. This one here, the Wire, so the global copper miners ETF, still bullish on this, but it has had a reasonable rally. We're originally sort of talking to our subscribers about this one at around this $10.30 level. It's now put on, not quite about 10% since then. But we do think that there's further upside into sort of that 11.50, 11.75 there. Santos, I quite like this. The rally here from the $6.50 support level up towards 7.75. When we look at the energy stocks, Santos still remains our preferred exposure. Then Woodside, then Beach, and then obviously could be the oil ETF. Instead of the oil ETF, we've gone the oil futures, and I'll continue to sort of review that in the coming weeks. This one here lagging behind a little, looked like we were maybe getting a bullish setup there, but that's back down testing near the lows. But I'll continue to sort of back that in 2024 we're likely to see just better performance out of some of these oversold Chinese stocks, and that should feed through to those index plays doing better. This one here, the Cure, the global S&P biotech, so we've been bullish on this. Now, just to put in a percentage terms, we've got about 40% of the market under buy conditions at the moment, about 60% under sell conditions. So we've seen that increase, and you've obviously noticed an increase in the number of sell signals coming through. And that really is in line with just those indexes getting back up near the resistance levels. But we're not yet always cashing out of these positions, so we're mindful they're under red arrows, but giving a little more upside momentum, and then obviously having a look at when they close below the moving averages. So I'll just go through a couple of examples on the sell side. So ASX, we're still bullish on that, but mindful that it's now under sell conditions and waiting for that momentum to roll over. Likewise with Macquarie, gold ETF there, Coles, similar type pattern, Lendlease. So an example here with Lendlease is that this is a stock that we think is actually setting up for a new algorithm buy signal in 2024. So this might be a great example just to sort of finish on these stocks that are under sell but in the early part of 2024 we expect that this rally off the recent lows and a pullback shifts the pattern away from sell conditions into algorithm buy, and sets up a far better environment for Lend-Lease. So I'll just move it through the last of these stocks that have gone on the advisory blog. So the VAT Vanguard Property ETF, obviously that did very well. We were bullish on that at around 70, so it rallied a little over 10%. And we're actually seeing that now reflected in our Australian Property Fund, which is up about 8 or 9%. Just in the last 2 or 3 months. So the property fund's doing well. So again, I just remind you, if you've got any interest in having a look at an investment in our Property Accelerator Fund, please give me a call in the office and I'll share more information with you on it. Again, example here of one that's been under buy conditions. We've been bullish on this. It's rallied from sort of 950 up to 10. We think there could be a little more upside in this. So again, you can see the resistance levels are sitting just above the market, but we're mindful sell signal, red arrow, and we'll probably get into a pattern where we see that rolling over. And there we are through to Tabcorp. So with this evening, let's just jump in. I'll go through just the top 50, and we'll just have a look at the handful of stocks that are under buy conditions from the top 50, and then I'll conclude this evening with a review of the trade table. So just to move through these fairly quickly and just share. So Origin, bullish on that, being a buyer of that on the dip. Rio, BHP and Rio have been our preferred iron ore plays, and we've had a great rally out of those, but maybe getting up towards a level where they stall a little. Aristocrat, you should hold that in your investor portfolio. There's good value there at $40. They're likely to keep growing earnings. ANZ remains our preferred bank, and we've added to that position. Computershare, we're not holding too much in that, but just drawing your attention to the switch from sell into buy conditions there, but not a big weighted position in our portfolio. Commonwealth Bank, we hold that in our portfolio. BHP, we've enjoyed a good rally off that $42 level there, up to $50 support. Fortescue's we hold in the portfolio. That's been really the best performing from a percentage terms. Brambles, the correction there from 15 down to 13, so we're starting to increase our exposure to Brambles now. Woodside, we've certainly increased our exposure to that in investor portfolios. Zero, I've shared my views with that with you already. Wesfarmers, top 3 or 4 positions in the portfolio, so we really like that. Multi-year recovery, continues to make higher highs, higher lows. QBE, just recognising that it's shifted from sell conditions now into algorithm buy. James Hardie rallied from after the switch from sell into buy at around $40, now pushing up to $51. Cochlear, one of the better performing stocks recently. The switch from sell conditions there into algorithm buy at $240 approximately, and now pushing up towards $300. Telstra, under algorithm buy signal, we still see support there around $370 and room for that in portfolios. So both QBE and IAG are under algorithm buy signals, and IAG at around $550, you could comfortably start to have another look at that one. Santos we like, we're still buyers of it even at around $7.50, $7.60. That's a good holding for your investor portfolio. Suncorp under buy condition support around $13, and that rounds off what's under buy conditions in the top 50. So now what I want to do is jump out of the model portfolio and go into the trade table. I'm just going to go straight into the top 200. I'm just going to remind viewers how the performance of this has gone for the year. So it's up 31.8%. Just in the last sort of 8 weeks approximately, it's rallied from being up 23% to up 31%. So this trade table is focused around short-term trading. So the average holding period here is really somewhere between 7 to 45 days. 7 Group Holdings is a bit of an outlier. It's been in there now for 54 days, but it's up 27%. And I'll scroll through these charts just to share with you the technical setups and just to share with you my thoughts as to how much longer the trades are going to run. All of these positions have automated stop losses, and so the stop loss gets set at the same time as the buy position, and they're all automated. So again, if you want exposure to this as a strategy, give me a call in the office and I can walk you through the managed fund and the automated brokerage portfolios to get exposure to this strategy. Or obviously you can just subscribe to the technology and follow these in real time yourself. So if we have a look at the days held, so these first few that I'm going to go through have been in the trade table for 3 days, and then obviously 4, 6, 19, and then 7 group, as I mentioned, 54 days. So let's just have a look at the technical pattern that we're looking at here. So in the case of Boss Energy, algorithm buy signal, green arrow, the momentum starting to accelerate. So simply this is a trade that you should be long, and your stop loss is below that pivot low right there, so your stop loss is at 375. Capricorn, same thing, under algorithm buy conditions, we got the green arrow there, the momentum's moving higher. You want to be long this with a stop loss just below that 415 level. GUD Holdings, algorithm buy signal, green arrow, momentum, so this has been in there for a little while now. The red arrow is the first warning, so we're probably getting fairly close to where we may get a rollover and a close below the average, and that position closed out of the portfolio. Karoon Holdings, so algorithm buy conditions, green arrow, the rally off that, so stop loss goes below that pivot low just there, so your stop loss will be at $1.84, and we're looking for this momentum to keep accelerating off the inflection point. And as long as that momentum remains positive, the algorithm will stick with the trade. New Hope, buy conditions, green arrow, momentum starting to pick up. So that's now added into the trade table. Again, stop loss goes below that pivot low. And then this one's really been a tremendous performer here. 7 Group Holdings, been in there for 54 days. So off the back of the primary buy signal, the green arrow, the entry date was just there on the 25th of the 10th, and it's mostly continued. It's had a couple of little consolidations, but never really any major pullback. So it's been a really strong rally from a momentum standpoint, but we are under the red arrow. We're getting into that longer duration, 54 days. We know most previously throughout the year, most long held trades were about 45 days. So we're pushing sort of out to that extreme of the time frame. But we certainly could get another consolidation and a push higher. But we're probably nearing sort of an area where I think this gets closed out. But a terrific rally there, 27% gain in 54 days. So the stop loss is all in place, as is the trailing stop loss as well. So again, if you'd like to follow the ASX 200 trade table, jump onto the website, reactivate your trial or set up a new free trial, and I'm happy to spend some time with you making sure you know how to navigate through the technology and follow that trade table in real time. Or if you're just interested in exposure to it from an automated standpoint, please give me a call in the office, and keen to discuss that with you further. Thank you very much for listening in, and I look forward to speaking again in our next public webinar. And for our members, wish everyone a Merry Christmas. This will probably be the last webinar for this year, but I'll continue to update on the blog and share with you obviously any trades that we're taking action on. So again, don't hesitate to give me a call to discuss the ideas presented this evening, and enjoy the Christmas festive season and the time that you celebrate with your friends and family. So thanks again for listening in.